to begin the panel discussion number 3, and may I now please invite Srimati Aditi Trivedi ma'am, in charge NBBL, to kindly take over and moderate the session.
Thank you, Shafali. Very good afternoon, everyone, and thank you very much for joining back. To start with, if you look at how the SME world today is, SMEs play a major role in most economies. A World Bank study of 2021 says that SMEs account for about 60% of businesses and employ more than 50% of employment across the world. And their role is much more critical in economies like India, which are developing, wherein they are contributing to 96% of small businesses and providing 3 out of 5 jobs in the private sector. If you look at it from an Indian perspective, MSMEs are at the center of India's evolving economic landscape. Government figures are estimating that there are about 65 million MSMEs, and they are contributing more than 38% to the GDP and generating 1/5 of country's employment. This is not a small number to look at. According to the report prepared by UK Sinha-led RBI expert committee in 2019, the sector has an estimated credit gap of 20 to 25 trillion Indian national rupees. That is a big amount to look at. More financing is required to get into the depths of this segment. With 11% of MSMEs covered in formal financing, 64% of total borrowers which are outside 50 top cities of the country, and only approximate 30% of their credit demands served, MSME financing is known to be an underpenetrated segment. Few of the policies by government have also been put in place, like the Pradhan Mantri Mudra Yojana, the Credit Guarantee Fund Trust, ECLGS, digitalization, the Jan Dhan Aadhaar mobile scheme. These all have been implemented by the government with a view to ensure there is credit available to the MSMEs in long term as well as short term for all kinds of infrastructural needs. In India, Fintech and financial services sector has also taken some really innovative steps and have put in innovative products in place in the recent past to reach out to these entities and address this need. Some of these can be said that they are using digital footprints. Certain words or certain schemes and modules which were never seen before, like verticalized underwriting, are now a norm in digital lending space. They are customizing and alternative credit assessment models and tools just to make sure that everyone in the MSME segment has a possibility to get a fair credit and a formalized credit. There are processes which are for the underwriting assessment through digital processing, reducing or eliminating the need for collateral, developing simple and convenient marketplaces. The issue at hand is even more pertinent when we look at all this from the context of G20. If you look at how, since the time India has assumed G20 presidency this year, all the groupings have had a constant and dedicated focus on this issue. And all of them have been towards developing high-level principles. And more recently, the last one has focused completely on developing an action plan for SME financing. With this short introduction, wherein we've talked a lot about what the industry numbers look like and where the industry is headed, let's have our experts here who would be discussing much more about the panel with us. May I, without any further ado, may I please introduce and request Dilip Raut, Chief Collection Officer of Lending Card, to join us on the stage. He is a finance professional with 24 plus years of BFSI experience. He is a native of Odisha and a very, very keen supporter of MSME partners. May I also request our second guest today, Mr. Yogesh Patwari. He is heading Enterprise Platforms Business at Credible. He has 15 years plus of experience with MNC banks such as Deutsche, HSBC, Citibank, and he is not only a finance professional, but a qualified CA as well. Thank you, gentlemen. Without taking any much more of time, let's move on to understand and get insights from these experts on SME financing. So, Dilip, you are from one of the most leading digital lending platforms of the country. So, if I may request you to give some opinion to the audience here on how do you see that financing options can increase and enhance penetration through digital lending platforms, such as yourself working with Lending Card?
Thank you. Good afternoon, all. So, what is digital lending, or what is on that question? So, before thinking of digital lending, let us think just maybe a couple of years when how the business was being done on the loan segment. Like people used to give the documents, and then the banks or maybe the NBFC, they used to do that underwriting. And that was taking a lot of time. Today, in my organization, we take a few minutes to come to a position to underwrite the entire loan journey from sourcing till disbursement. How that is possible? That is only possible with the technology, right? Where, I understand, today the AI and ML, which is there, that can tell me how to get the details of the customer, the entire banking system they utilize, the finance they do, the transaction they do. Considering all that in one place, I can do that. Today, almost around more than 1 lakh customer that has they have been taken the services from a Lending Card, which I represent, and the entire system is digital. There is no paperwork there. Neither we need any document or meet the customer at their place or something. So going forward, this digital lending space will take a much larger role, because today almost around 270 billion is what the digital lending space which is being done. I think in the next couple of years, maybe 2-3 years time, that should cross around 350 billion in maybe 2 years or so. Yeah.
Thank you, Dilip. Taking a cue from what you just said, we also see in the market that most of the digital lenders are actually using various payment platforms. They are collaborating with aggregators to look at how the payment of each of the credit borrower is, so that the credit worthiness can be assessed. We also see analysis on transaction patterns, on balances patterns, etc. So, having said which, Yogesh, may I request that what would be your views according into this? And when we talk about AI, ML, and different platforms being utilized in creditworthiness, do you think that has far more outreach and will help in more penetration?
Oh, definitely, Aditi. I think that's a very valid question, and I would actually, go on to say that it is not an option anymore. It's actually the only way in which digital lending can be done in India and can be scaled up. While we've seen that, fintechs like us and, a few other NBFCs have been using AI, ML, other data, aggregators or other, IT service providers to enable, liquidity for small businesses in the remotest part of the country. Increasingly, what we will, eventually see is that the traditional capital providers like banks will also come to the party and start using these services. Because, as I mentioned, this is something which is invariably the need of the hour. And if we take a step back, why do we really need to use these services? So small businesses traditionally have relied a lot on cash, very poor bookkeeping, plus there's been no credit history, etc., that they can really offer to traditional capital providers from an underwriting perspective, right? To add to that, most of them don't really have a lot of collateral, tangible collateral to offer to lenders. So this is where it becomes very important for digital lenders to be able to, write their credit assessment on AI and ML, whereby we can establish the creditworthiness of a counterparty. So we use data, and in fact, government has been very helpful here. We've seen the economy getting digitalized increasingly, so we can use data, pull information from various government portals, from third-party sources, and complete an underwriting that helps us to do lending in a much more intelligent manner. But as I said, I think increasingly we'll see not just digital lenders or fintechs, but banks also using this option more and more.
Absolutely. So, I mean, continuing this, what do you think? What would be a better, which would be more leading players? Because we have seen public sector banks majorly very deeply entrenched into the heart of the country, wherein they have been providing conventional finance to all segments, inclusive of MSMEs, at a very affordable cost. However, they have been very conventional in their approach. What would you say that is the future looking like? Is it the fintechs which are going to take up, or is it the banks which are going to take up? Yogesh, if you can maybe take this question.
I'll just take that question, Aditi. Aditi, today, I think one word, co-lending space, which is a bigger word today. In that co-lending space, the fintechs and the nationalized banks are getting collaborated, and the funds to co-lend, like the fintechs are becoming less. What is happening in that partnership? The established or the bigger player like banks or bigger NBFC, they give the fund to the fintechs in a very, very less cost of fund. And then the NBFC or the fintechs utilize their model to distribute the loan to the smaller MSME segment. And this is going to be one of the biggest thing in future that we generally say as a platform business model. This is really going to be very, very helpful because the fintechs can take their underwriting model to on those customers who are new to credit, and then banks can give that money to the fintechs on this co-lending partnership model, and obviously the MSME customers will get the benefit, Aditi.
I'll just add a couple of thoughts there,
Sure.
Aditi. So I think I completely agree with you, Dulab. However, I think I believe it's a misconception that fintechs and banks are really competing with each other to lend. And there needn't be one winner and one loser in this game, right? I think both will eventually collaborate together. What happened historically is that banks, due to some reason that we already covered and various other reasons, shied away from directly lending to small businesses. That is where a space was created for fintechs to come in, use technology, start lending money, and show banks how it is supposed to be done. Going forward, we'll see collaboration. One is, of course, through co-lending route. Second, some fintechs like us, so Credible is also helping banks build technology at their end to be able to underwrite risk for small businesses using data, AI, ML, and at the same time have an end-to-end digital journey, for KYC, documentation, loan disbursement, and then eventually, even risk monitoring. So monitoring early warning signals, how do you really identify which asset is secure, et cetera, or not. So I think in the short term, I would expect fintechs to be leading, digital lending. In the medium to long term, I'll expect more collaboration between both banks and fintechs to happen. I believe banks would still remain the largest capital providers. Fintechs would definitely help them in this journey, but we would not be probably able to match their scale.
That's absolutely true. Perhaps going future, as we see that fintechs will become the extension and arms of banks to take this further to the customers. But if you also see, after COVID, lots of things have changed. Digital lending has taken up through the roof, specifically during COVID and post-COVID period. And you would, as the market has witnessed, there is growth and expansion opportunities are still a lot. Any comments on that? Where do you see more growth happening? Specifically, which segment of MSME do you see a lot of growth happening?
So COVID-19 actually gave a much bigger reason to go more into the digital space. Once I think the pandemic is over, I think it took a little time to cover up the entire losses that has been happened for a year and so. But today, Aditi, I think it has been like we are just gone past the issues which was there due to COVID-19. So today, thankfully, the e-KYC, sign, and the digital locker space which is there, that is more helpful for the digital lending space. And that is helping the entire finance market to take a call and take the underwriting in a very, very quick way. Anything you want to add?
No, I think I completely agree. So what See, what interestingly happened during COVID, even though the pandemic was, not kind to a lot of us, but it also pushed adoption of technology like never before. Government had been taking a lot of initiatives. So we had, creation of digital, let's say, credit history through GST, e-invoicing, etc. But I think still there was heavy reliance on cash, as I mentioned earlier. Uh, with COVID, small businesses started using technology, started using digital payments. That helped create the necessary credit history, which lenders can now rely on. Uh, so I think going forward, definitely, I think it is now totally up to us fintechs to understand the economy better, understand how transactions are taking place between different counterparties, develop new credit underwriting models where we can use the data available from various sources, government portals or third-party sources, and be able to underwrite credit and come to a conclusion whether a counterparty is creditworthy or not, without relying on tangible hard collateral. I think we don't really need somebody to, for example, show their balance sheet anymore. By looking at the counterparties, GST returns, trends over a particular period of time, we can have a fair estimate of how their business is performing. And this is where I think probably we are headed towards, having newer underwriting models, which will use different data sources.
So just to add to that also, the customer or the end users are more knowledgeable about that. They know like things will be in digital way, and they may not give the hard copies, but at least they can utilize other things, and they know like in the click of the button in the mobile itself, they will get the services. So that is more important, because at the end user, if they know the how to utilize that, and if they know how to put forward that request, so I think COVID has given that learnings to everyone, like everything can be possible in the click of the button in the mobile itself.
Right, right. Yogesh, in the previous conversation, you talked a little about risk monitoring, right? So do you see that risk monitoring, as you've said, that risk monitoring has improved over the period of years? And do you see that going at the cost of expansion, or you see that going together with expansion and growth?
So this is actually his domain, but I'll just add my thoughts and maybe then, he can add. So risk monitoring is even more important in digital lending, right? I think while initially we have all started off with granular lending, which is essentially, small ticket loans, where possibly, we're comfortable with the portfolio, right? We would not probably have too much worry about a large number of borrowers going by at the same time. But as ticket sizes of loans increase, risk monitoring is going to be very important. In the absence of any tangible collateral to fall back upon, plus given the fact that most of these small businesses who we are talking about, may as part of their business be very reliant on one or two larger counterparties. So I think we need to very closely monitor, their transactions within their ecosystem, and look for early warning signals that can help us, make sure that we are able to, monitor risk at the same time and take appropriate decisions as a lender. But again, I don't think this will be at the cost of scale. Definitely lenders will need to, as I mentioned earlier, develop newer underwriting models for different segments of borrowers that they're trying to reach out to. But as more and more such models emerge and more partnerships between fintechs and banks emerge, we will only see the scale grow here, and not necessarily one getting compromised because of, let's say, risk monitoring tools not being in place.
Right. So one of the things which we see at Lendicart when it goes out in the market is that obviously the monitoring tools are in place, but there are certain other challenges also which we see in access to this credit, specifically from an MSME perspective. Any thoughts on what kind of challenges you see today? I mean, if you could enlighten the audience, and also what are the future cues you see which might pose as a challenge going forward in long term for credit?
Okay, so the biggest challenge is most of the digital lenders, they do not want to operate in a branch-based model or the hub and spoke model. So, in that thing, what will happen, like there will be, when there is digital thing is there is a suspectable fraud mentality people will be there to, take that thing into negative way. In the sense, today I'll give loan to all those customers only by going through their bank statement or the business they utilize. So there will be some portion of risk involved as far as fraud is there. If I do not underwrite properly, if my technology is not that strong, and I depend upon many softwares, and if that doesn't work properly, the fraud identification will be a little difficult for the digital lending organization like me or something like us. So I think that is one of the greatest risk which digital lenders are going to face. That is one. The other point which is that today my focus is to go to the rural India and support them financially. Maybe the whatever requirement as far as MSME is my rural India is covered as far as technology or mobile network is concerned. I think some part it is covered, but many parts still there is a disconnection in that. I think those are the two issues which I feel today it is persisting. Maybe within few years things will get sorted out, Aditi.
Correct. But if you look at it, most of us have a perception that credit is only difficult in rural areas, as you're just saying. It is difficult. But do you also see that credit is also difficult in urban areas? Because generally the industry data says that borrowers are spread out in the top 50 cities. Beyond that, there is a thin layer of borrowers. Beyond that, we do not see a lot of borrowers. Even in the top 50 cities, you would see that borrowers are there. However, there are equivalent amount of risks and NPAs. And that is why access to credit, actual access to credit is limited to a level.
Exactly, like Aditi, it is not like that. Yes, you can say the top tier 1, tier 2 cities are having opportunity for that, business for the MSME sector. But again, for me, like as a lender, for my organization, we are present at almost around more than 1,500 cities, towns in India, right? Out of that 1,500, 1,200 are rural India. I do believe, because those are the customers, they required more support than me, because anyway, banks will be easier for those, tier 1, tier 2 cities to reach by this MSME customers. But for the rural India, if I can be there and they can, send their request in click of their button mobile, then I can underwrite anywhere by utilizing the AI and ML model. So I think today it doesn't matter it is tier 1 or rural India.
I just have a couple of statements here. So yes, I think what you said is correct. It is not just a question of the credit being difficult, right? I think it's also a question of awareness. I think our MSME is really aware of alternate funding options beyond traditional banks or informal sources of credit. I mean, I think that awareness is very low. And this is where, no matter how much we work, I think I was very happy when I saw that the Odisha government is, organizing this event, right? Because we need governments to actually create that awareness amongst MSMEs. I mean, private parties can only do so much. I think there was some similar initiative taken by the government to, increase awareness about IPOs for small businesses in Odisha. That's also commendable. But I think we need this across the country. We need governments to step up, create awareness amongst, small businesses on alternate sources of credit. And again, it is up to us to make sure that we are doing this lending in a transparent manner so that trust deficit can be bridged. So today, probably a lot of MSMEs are not coming on board and participating on fintechs because of some bad experiences that they may have had. I think that's up to us. We have to make our process completely transparent, all terms and conditions highlighted upfront, so that there is no gap in their understanding and our expectations.
So talking about awareness, do you think zero cost and collateral free loans will work everywhere? Do you think that will help in further penetration? I
mean, obviously I can say why not, right? I mean, that's the ideal end game. We have to, as I mentioned, credit underwriting models are still evolving. Small ticket loans are fine. I think we've had sufficient success there already. For large ticket loans, we will have to figure out how these models evolve over time. so far, we've not seen a huge success there. But that's also because, as I mentioned, credit history was not available in a lot of cases, right? So that's slowly getting built up now with the economy becoming, digitalized. Uh, I think, yes, so for example, at Credible, while small businesses, so far focused on small ticket loans, but we also have other capital providers on our portal, and we have been able to do, let's say, funding up to 5 crores for startups and other businesses. So I think that's it. Trying to get there, not completely there. I'm sure other players will also similarly figure out their own ways in which this objective can be achieved.
So just to add to that, Aditi, just before some years, giving loan, it was taking more than weeks or 15 days time, right? Today it is just click of a button, maybe in a few hours you get a unsecured loan. And if that can be possible, maybe down the line 1 year or two, I think giving high value SME loan, maybe more than 5-10 crore without any mortgage, without any security is possible. Today also we are thinking in that line, Lending Card as an organization, we are thinking in that line just to give at least around 5 to 10 crores without having any security, taking any security from the customer, because the need of our is to increase the business, and when we are thinking of 5-10 trillion business, maybe by another additional 2-3 years, then if I keep myself restricted, I can only give loan through some mortgage, then we cannot achieve that. So that's the reason we have to think as a whole, thinking something, not taking mortgage and giving loan. That is possible, and I think people are thinking in that line, Aditi.
So we should expect 0% finance from Lending Card very soon. No interest
I think
charge, no
today
collateral.
we are totally 100% unsecured loan, and the loan value we are giving up to 1 crore now. So I think giving zero mortgage value, maybe more than 1 crore, yes, there is a possibility in near future.
Well, I hope in audience many are taking notes, because that's where the next applications have to go to.
I do so.
Yeah, over the lunch, I think we were also talking a lot on how digitalization has helped and AI ML has helped. So I just wanted to understand from your entity's perspective, for the niche segments, like high ticket segment, for the niche segments, what kind of cues are you looking at when you look at the creditworthiness of a particular borrower? If you could throw some light on that, because that is one of the key aspects many borrowers look at to understand whether I will even get a loan or not, because sometimes that's also a hesitation from the MSMEs who are specifically from the micro segment. So if you could also give us some insight into what a borrower creditworthiness points are, probably that will help a lot in the audience. Either of you.
See, again, I think underwriting models may be different for different industries, different segments of small businesses, right? See, all we are looking for today is digital footprint. Now, that footprint can come, in the form of transaction history. It could get reflected in your bank statements. Again, there should be a way of getting those details verified, or your GST returns, or your, for example, the trend in which you've been raising e-invoices, e-bill verifications. So there are multiple tools that are available to lending institutions and underwriters today, depending on the nature of business and what kind of transaction history is available. That model may vary, or in fact, it significantly varies from one counterparty to another. All I'll recommend is if small businesses are looking for unsecured facilities, I think it's very important for them to digitalize their entire business history, transaction history. I think without that's step number one. If they still rely on cash as cash settlements are a large part of their business, and do not do proper book, record keeping, then it becomes very difficult for lenders to have any view on the creditworthiness of the counterparty. So I think the only thing that you need to ensure is make sure that you are adopting digitalization of your credit history and transaction history, and then leave the rest to the underwriter or the lender, right? Let them figure out how to use that data to be able to arrive at a lending model.
So the variable that we as an organization use is the bank statements of the customer, where I can understand, go through the bank statement and see how is the transaction, what is the business income they do, how is the transaction happening. The other points that we utilize is the credit behavior of the customer to understand that, we fetch the details from the credit bureau, CIBIL or Experian or anything like that. The third variable what we use is their tax payment behavior, maybe through GST, maybe through individual tax payment. So these are the basic three variable that to utilize, and from this three major variable we get many data points to understand what is the customer, how much the customer can be taken as a credit or what the value he required or what we can offer, and with what rate of interest, and what can be the tenure, by what time he can pay that amount. So considering all those, and this is purely by AI ML. There is no individual involved in that to understand that, and that takes a very few minutes to understand that. That is very easy in that.
Sure. Thank you very much, gentlemen. This session has been enlightening. A lot of new things have come up. I hope the audience has also been able to get some knowledge and insights from it. Thank you very much for being this patient with us. And may I please request Umakant Sahu, CSO, I serve you, to present the mementos to the guest speakers. Thank you so much. Thank you, Shefali. Over to you.
Thank you so much, all the panelists and our moderator. Thank you so much once again. And herein, we go ahead with the next panel discussion. And to moderate the session, may I please request on stage CTO I serve you, Shri Sanjeev Parida. Sir, you may please join and kindly take over.
Thank you. Thanks for inviting me on the stage. And so this is a panel discussion that is about fintech and bank collaborations in Eastern India. And so with me, I'll be the moderator, and with me the discussion will happen with Mr. Vimlesh Kumar Pandey, who is DGM Digital Banking Unit at UCO Bank. May I invite him on the stage, please? Next, I'd like to invite Sri Prakash Lal, Senior Vice President Payments, Fino Payment Bank. Next, I'd like to invite Sri Samir Garud, Vice President, Head Banking and Enterprise Products with Pay Nearby. And last but not least, Mr. Rageshri Tungar, Vice President Sales, Pine Labs. So, sir, if we could take our seats. And I'm not feeling comfortable having standing here and moderating it. And if you give me a seat, I could also come and sit next to you. Thank you very much. So what is interesting about this panel is we have two people from the bank, we have two people from the fintech. So I would like to be the barrier between them. And so if we can have banks on one side and the fintechs on one side, so I can control the duel as a referee. So let's put it that way. So the strategy we will do is we'll spend a lot of time in arranging ourselves, and then we are done. We don't have to discuss much after that. Sure. Thanks for accommodating to my special request of mine. Now, so this is Arnav Goswami. So Nation wants to know that, no, sorry. The time we are in is at the cusp of some customer behavioral changes. where the customer yesterday, the way they consumed banking is not how the customer of today is consuming. The customer of today is not needing a bank per se, they're only needing financial services, and they do not care in what form factor they receive it in, and who do they receive it from. And that is creating new challenges for the banks. That is also creating new opportunities for the fintechs. That is what I'd like to throw this discussion open to everybody and start taking opinions. So let's start with the banks first. Mr. Lal.
So I feel that partnership between banks and the fintechs is actually the need of the hour today. As you said, that customers today are.
A little bit nearer to the.
So. So I feel that customers today are more demanding because of the various opportunities which are available in the market, be it from the banks or from the fintech players. But consumers are more trying to find solutions which are more digital, which are more user friendly, and they can do it through some few clicks of a button, right? And that is where it is more beneficial for the banks to do partnership with the fintech players who bring more innovation in the sector with more agility and scalable products. And of course, the bank brings their own strength like the trust and regulatory compliances. So both bring together a very win-win situation from a product innovation point of view for the consumers to add more value. That is my view.
Great. So what about your opinions, Mr. Bhubanesh?
Yeah, thank you, Sanjeev. And first of all, I like to congratulate and convey my deep appreciation to the government of Odisha. As we all know that the sun rises from the east, and the initiative is the government has taken, particularly keeping the east in the mind, is really an appreciative one. So when we talk about on a geopolitical basis that it requires an inclusive growth, yes, irrespective of your geopolitical notions, your geography, we all need a development across the country, across the world in a similar and a uniform way. Now coming to the point, what Mr. Sanjeev has said. Sanjay, see, there is a behavioral changes, and it is not about the banking or the adoption of banking. It is on all the space of the life. The earlier what our ancestors used to do, our fathers used to do, grandfathers used to do, now what we are doing, and definitely what the next generation is going to do. All are different, means everybody is bettering or enhancing the way one has lived his life. Now since this is related to the financial world, let me bring the topic straight to the financial part, wherein earlier the trust was when the customer, unless and until he goes to the bank, he talks to the bank officials, he was not so confident and he was not gaining the trust, what you can say a trust, because it is related to the money, and money is something which matters a lot. Gradually when the generation of ours came, we were in the mid of it. Yes, what we have inherited by the way of our culture, we were looking for that. But yes, since we are progressing as a part of a civilization itself, what we came to know, no, there is a factor, there is a technology, there is a disruption, what we can take and we can make our life and we can save our time. So we started adopting the technology. But yes, again there is a mix of mind because we have learned something and we are contributing something. So we are in a mix. Now the target is the next generation, what they are coming, somehow they are fully dependent upon the technology for all the purposes, to the maximum of their purposes. Now here the real challenges comes. Because the banking itself is not a technical department. Mind it. It is to provide a commercial assistance, not a commercial, means it is there to provide a financial assistance for everything. But how the financial assistance was provided? Basically, it was through the conventional banking only. And the computerization has helped to make a records only on a digitized form, not on a technological aspect where the ease and the convenience was provided. Here comes the role of the fintechs. So those two gentlemen are there. They will let you know how they have changed their life. But again, yes, as we say that marriages happen and marriages should happen when there should be a compromise and understanding between both the parties. And the same stands for the banking and the fintech. So the idea is in inauguration session, there was a regulator, there was a lot of learned person, intellectuals who pointed out, yes, we need a change, we need an adoption, we need a convenience, but yes, the regulations should be kept at top priority. And how the regulations comes, bank knows much better about the regulations, but bank are not so good in the technology part. So here the fintech comes as a part of providing the solution to your problem. But who knows the problem? Again, the banks, because we talk day in, day out about the problems, and our problems, they say, yes, you come up, I will make your life easy. And this is how this journey has started. So it will be good that now my fintech colleagues, Mr. Sami or Mr. Rajneesh, they focus on it, how they are going to make the lives of the common man and the banking industry a better one.
Thank you. And so Mr. Vimlesh says that the banks are available, are wanting to marry. So now the question is, are you available? Are the fintechs available to marry? And in what way?
So first and foremost, I would like to thank everybody to give Pine Labs an opportunity. Thanks NPCI, thank you Government of Odisha. So to extend to what Vimlesh is saying, I completely agree. The fintechs are and the banks are not at loggerheads. Okay. Now you need to understand one thing, that only the traditional products will not help to solve the entire problem which traditionally the banks have been given. And because of geographical restrictions, you cannot reach to the last mile. Now for that, the fintech is giving a solution to the banks. And via the digital mode, the fintechs will actually enable banks to increase the financial product penetration across multiple geographies. So I think that is where, it is very important that fintechs and banks work together in getting the solution right.
How about your opinions?
I cannot but not agree with my banking colleagues. So fortunately, unfortunately, I've been a banker for more than half of my professional life. So in the last 5 to 6 years, I've been in the fintech space, and probably the only thing that has changed for me is that I've moved from one side of the table to the other side, right? So I've always been in banks trying to kind of forge partnerships with fintechs, like-minded fintechs, trying to kind of provide the best-in-class services to the customer, because at the end of the customer, I'm sure at the end of the day, everybody will agree that the customer is king in any business. And any entity who's wanting to have the best services provided to the customer will win. So I think the mindset is important. As long as both sides have the same mindset to provide the best services to the consumer, every partnership, every marriage will work and will go a long way. That's what I want to kind of put on the table as of now.
Thank you, Mr. Sameer. Now that the context is set, that the banks are available, the banks want to marry and the fintechs are available, and they're available to provide what the banks are doing. So let's get to the hard part. So it's good that for acquiring customers in the newer channels, banks are looking to integrate with new fintech partners. But can we also understand from the bank side some of the pain points? What has been stopping your growth or your speed in adopting fintechs at a higher rate than it is happening right now? If you could start with Mr. Vimlesh.
See, when a concept comes, if we talk about a fintech itself, the evolution is, let's say, for a last decade, which has taken a pace in the last 5 to 6 years. When it comes to a bank, it's a financial world, and we are responsible to a lot of people, right from the citizens to the regulators to the government itself. And these fintechs, when they come up with the ideas. There are a lot of ideas, innovation, but at the same time, we have to understand that there are constant and challenges also. Let's say, for the sake of example, I will put up one example here. We talk about a form factor. Nowadays, you will see there are a lot of form factors available in the market. Wearables, we say. It means with the virtue of your tap and pay, means contactless payment, you can make a transaction. So everybody knows, most of the people will understand it is a alternative to a debit card. Because what you make, you tap it and make a payment. And 90 means, my personal opinion is, many people think that yes, it comes with a restricted amounts, because there is a restriction of 5,000 per transaction. Somebody puts a per day limit also. And there are other factors also. You cannot withdraw the money from the ATM and other things. But at the same time, if we recall a regulator, there is a master direction which came in the month of April last year, It says any scheduled commercial bank or anybody, if he comes with the variable thing, they have to take a prior approval or they have to inform to the regulator. So this is a something new thing. Most of the people, they don't know, yeah, there are people, means your compliance should be so strict, so good enough that they should be aware of the changing scenarios, what are the regulator doing, what are the new norms regulators are putting up. And keeping those things in the mind, you have to come up with the solution. Convenience is okay, solution is okay, everything is there, but yes, there is a limit, there is a peripheral wherein we have to work. Who is going to take care of that? How many fintechs are there where there is a good number of people with all the qualities which is required for a successful evolution? You may be very good in a technical aspect, you may be very good in a convenience, you can provide a ease, but we cannot say, you cannot guarantee that everything is a perfect what the country is looking for or what the regulator is looking for. So, when it comes to a bank has to look after this because this is a marriage and everybody is having a role. There is a plus strength and the weakness of both the parties. So what is a weakness for other party, that should be overcome by the next party. So here comes the role of the bank. So these two things, both have to gain a confidence. And now with the help of lot of things, means the industry is changing, lot of things are coming up, and both the parties are gaining a self-confidence. For the sake of this, I will just put up last year UCO Bank. I represent a UCO Bank. Last year we made an empanelment with the 45 fintechs in our bank. And with them we have already come up with a 9 to 10 products, 3 to 4 are in pipelines. Some of the unique project today in the morning you have heard about UPI 123 through Miss Call. We have already implemented it through the IBR in the last January itself. And that too available in 11 languages. Then there is a soundbox concept. Recently, you may have heard a Paytm announcing that they have come up with 11 languages. We have introduced in the month of November itself with the help of a fintech itself. So these are the things which is happening. Gradually it is happening. And I think now the days are very shining. Means we have broken the constant, we have come up a long way, and we all have a mutual respect and we know each other very much now. And I think the days now are going to be very brighter, and it is good for the customers as well as for the country itself and the ecosystem.
What are your opinions, Mr. Lal, on the difficulties that the frictions that the bank is having in engaging with fintechs at a much larger scale than it is doing right now?
So as Mr. Vimlesh was saying right now, see the traditional banking, the banks were doing majorly through branch banking, right? And it was a belief that the consumer, they want to go to the branches, they want to transact through branches, right? Eventually in the last, as he was mentioning, in the last 5 to 6 years, we have seen an evolution where the fintechs are, bringing different kind of products, which is more innovative and more agile, right? But there was a legacy which was there, where the acceptance from a traditional bank, right? It was a bit more, it took more time. Now it is not us versus them. It is actually more banks are treating fintechs as a partners. And they know that to go to more and more customers and to reach to the last mile, not only through to have more and more touch points, it is very important, and it is more like a partnership with a fintech to serve their customers in a better way, right? So that is my feeling. At Fino also, we have gained a lot through our API partnerships. Of course, iServU was one of our first API partner, right? And from that, we have taken all the banking products through our API partnerships, and on the B2B side through our API partners, we do around 10,000 GMV on a monthly basis, right? But it is more important that we also look at, as he was mentioning, that every fintech, they can bring, good ideas, more innovative ideas, novel ideas. But when the idea is being discussed, as banks, we are more cautious from a compliance and regulatory perspective. And we need to definitely see whether there is a fit from a risk and compliance perspective as well. So that is more important. And how the product needs to be designed so that it is more easier and, user acceptance is more. But on the other side also, it is more safe, for the customers, and regulatory and compliance for it is also okay. That is what I think.
So now that we understand that banks are, I cannot say shackled, but slowed down by some of the regulatory requirements. What are your opinions as fintechs when we engage with banks?
No, I don't think banks have slowed down. I don't agree to that, okay? I completely think, they are right in their place. and fintechs, we need to adhere to a lot of compliance. Please understand, banks provide, for example, today Pine Labs is not only a payment company, we are a payment plus company. We give a complete full stack solution to a merchant, okay? Where bank does the banking part, we do a lot of their inventories, so on and so forth. So I don't think they have slowed down, okay? We are both playing on each other's strengths, okay? And they are extremely right. Today, there are a lot of startups, there are a lot of fintechs who do not understand the importance of, sticking up to the compliances which are required when you work with a bank. And today, at least for my organization, we can tell you, we have maximum number of banks which have been approved on our, on the Pine Labs platform. And we are certified by all of them. And today, we are completely 100% compliant. So I think that is a basic requirement which any bank would definitely ask for.
So, see what I have kind of learned over the last 20 years, most of it when I was on the banking side. I believe banking is a business of risk management, right? And bankers for the last 100 years have been managing risks of which customer to give a loan to and which customer not to give a loan to. That has been their core strengths, right? As slowly as technology evolved, bankers did not or were kind of slow in taking up the risks that are kind of connected to the technology developments and the technology interventions that happened in banking. And that is where probably fintechs took up that particular area and kind of evolved, kind of innovated under obviously the watchful control and partnership with banks. The second point I want to now make is that what I see in the last 4-5 years is that if you go back at 5 to 10 years, it was probably only the digital department or the digital banking, as most banks call it. They would be kind of interested in digital banking or digital transactions. Nowadays, after especially initiatives from various governments, including the central government and the pandemic, there are many people and many departments in the bank who have now started to appreciate what digital banking is, what digital transactions are, and how digitization as a whole, not only in transactions, but probably in processes, probably in customer acquisition, will go a long way in adding efficiencies and scale to banking as a business. So I think we have evolved, bankers have evolved over the last 5 years, and I see this partnership only doing better over the next few years.
Okay, great. So as we understand, and somebody out of the esteemed panel also discussed about it, that the banks are not typical IT organizations. Banks are in the business of lending. Banks are in the business of providing financial products. So I would like to understand, both from the banks and the fintech sides, that how are we changing ourselves, metamorphing ourselves as organizations to understand each other's pain point? How are the banks changing themselves to understand fintech's pain points? And how are the fintechs changing themselves to understand the bank's pain points? With you, Mr.
The answer to your question, first of all, Sanjeev, I will submit here that you submitted that the engagement is going on a slow pace. I don't agree with this because it is not a slow one. Gradually, if you see, it is getting matured day by day and it is taking a pace. Now, everybody may have some different measurement for the pace, what should be a pace, but it is not at all slowing down. Now, coming to the next one. See, your today's function itself says fintech and bank collaboration in East India. It itself says how the fintechs and the banking industry are coming together. Means what Mr. Samir was telling about, it is not related to a specific part. You see, whatever, whether it is a lending part, the most penetration what the fintech have done in the banking arena is in the payment system. We know where the UPI stands today and who has contributed for the grand success of the UPI. No doubt everybody will say it's a fintech only. You see how the lending journey has changed over the last 4 to 5 years. This is because of the fintechs only. They have come up with the way, with the convenience. Somebody was saying now what the user wants today. He wants there is a minimum set of clicks wherein he can get his job done. And who provides this? Fintech. But yes, fintech does the technical part and on the backdrop of it, the bank supports them. But still, there are a lot of things which needs a clarification, or I can say further clarity is needed there. let's say if we talk about most of the fintechs programs are based out of a cloud environment. When they design a program, they keep in mind the cloud because they find it ease, because the ease of the fintech solution is that whenever you want for a scalability, you want a tweaking, or you want any little bit of a modification also, they want it in their control, and it is very easy because they serve a lot of clients, they put it in a cloud. But if we talk about today, is there any specific guidelines or the clarity on the cloud users? No. Still we are in a discussion phase. You talk about data privacy, you talk about confidentiality. Everybody is talking about when the data protection bill is going to be introduced, what is going to lie in that protection bill. Because again, we have to act upon that. So still there is a ways where all the stakeholders, whether it is a regulator, they also require to come up with a lot of clarity. Few days back, the master circular has come about the outsourcing policy. They have introduced in the last week itself. It says a lot of things. Now when the regulator has come up with the outsourcing policy, it's the job of both the parties, bank and the fintech, where we fit. Are we complying all the norms? Because nobody is clear. You will say n number of things. Means there is a part when you say this is a UPI, this is a digital lending part. We know how many kiosks has happened in a digital lending apps and other things. Lot of restrictions, means lot of regulatory criticism has also come from most of the companies also. They have been banned, they have been stopped. Why? Because they have found something which is not suited as per our norms. So these are the areas where a lot of clarity is needed. Unless and until that is there, yes, there will be a shaky movement, but I can say we all are progressing. All spheres of the banking arena comes in the fintech aspect, whether it is a risk management part, credit monitoring part, everything. You are using AI, ML, and who is providing all this? Your fintechs only. So I think we are going on a right direction. Yes, the push is needed from all the stakeholders, and we can do a much better, and our pace can be a much greater.
Your opinions, Mr. Lal?
So, see, understanding, as you have asked about understanding the pain points from a banking point of view for the fintechs or from a fintech point of view for the banks, you know, if the understanding was not there, we would not have seen the revolution which has happened in the last 5 to 6 years, right? And as he was mentioning, it is not slowness, it is about being cautious, right, from a compliance and regulatory point of view. Whenever a fintech is there, the proper due diligence of the company. Whenever a novel idea is presented, what kind of idea is there, how does it fit in the regulatory framework, that is more important. And there can be certain pain areas which can be resolved, but there are certain pain areas which cannot be resolved because it is more like a non-compliance, right? A fintech may ask, like from an API point of view, a BC is also a fintech player and a partner to a bank, right? They may ask certain ease of agent onboarding, right? But there has to be a minimal risk factor taken into mind, and then only the process can be designed. But bank cannot certainly do away with it. A fintech may ask that, we don't want agent onboarding, we want quick agent enablement for the transactions, but that cannot happen, right? So such kind of things are there where the banks are more stronger, they understand the regulator more, they understand because they deal with the regulator in and day out, and they understand their viewpoint. There are many compliances. If I ask about RBI, everything is not black and white. There is a lot of gray spaces which are there. And from a compliance perspective, you need to check with your compliance and risk team to understand the regulation more. Because RBI will definitely ask what was the bank thinking about it, right? They may not exactly pinpoint. You may say that to RBI that this was not written properly. But it is, then what is your compliance as a bank, right? So that is where we debate more and more from a compliance and risk perspective. That is where there is always a committee in a bank wherein every new product has to go through the committee where all the bank, finance, risk, compliance, everybody is party to the committee, and then only a new product or a process is being evaluated and then approved. So that is where, so a bank does understand any new, issue or a pain which has been there, but any issue can be resolved only within the ambit of the regulatory compliance.
Just I would like to add one more point here. How this collaboration has helped the industry itself. See, for onboarding a merchant, there requires a certain KYC and other things. You cannot onboard any merchant like that. Earlier, what used to happen if a customer is of a bank, So the aggregator, if there is an aggregator, he will say, okay, if the KYC is with the bank, we are okay with that. Now, as for the new guidelines of the RBI, where the payment aggregator license has been provided, it is specifically been told to the aggregators that they have to keep up the KYC documents with them also. Means when I say a KYC documents, means their KYC details. Now, earlier these things used to happen on a paper. How the fintech have changed it? Everything has been digitized. Now you want to make a GSTN, it is online done. GSTN is online done. Their PAN is online verified. So there is nothing like where you require a paper. Somebody comes to your bank, he fills up the form and you keep it as a record. Everything is available on the digital part. You are doing it. You make your thumb impression, you are KYC validated. You put up your GSTN, it is verified. So these things, by this the fintechs have changed the whole scenario and they have benefited the bank also on onboarding a merchant and making a life a bit easy.
Okay, so what the banks are saying that the lives of fintechs are becoming easy. So what's your opinion, fintechs?
So see, end of the day, you have to understand whatever products we are creating is being used end by a bank customer itself. So we are nothing but an extended arm of the servicing the bank customer. And these products actually help the bank. So today, you know, there is a lot of banks whom I'm associated with, where I do not extend them any hardware services or anything. I purely provide software services. So they ride on my software solutions to give an enhanced experience to their customers. So you have to understand fintech is only helping banks to make their customer journeys better and giving them new solutions every day, an improvised solution which is making the life of their customer far better on a day-to-day basis.
I have already said that the banking and fintech relationship is improving every day as we speak. But if you want to kind of still point out a pain point, obviously from a fintech perspective, the pace of development, the time it takes to kind of get a product to market, given the genesis and the mindset of a fintech organization, obviously we will be much, much more quicker and faster than a bank. But obviously each has its own benefits and advantages. And it's a good marriage to have where one entity is trying to kind of push things quickly and the other entity is trying to ensure that there is enough and more controls and risk management put in so that at the end of the day it will be a beneficial product for the end customer.
Okay, so we heard from the bank, we heard from the fintechs, and what we could see a byline is this a symbiotic relationship. The banks are needing the fintechs to take care of the future customers, to enhance their reach. The fintechs are of course needing the banks because the banks come in with a huge knowledge base of compliance, of lending practices, of things that cannot be created overnight. So with that, I'd like to conclude this by looking at a very fruitful symbiotic future of banks and fintechs together, especially in Eastern India, where we have still a long way to go in terms of financial inclusion, in getting access to everybody for very high quality financial products. Thank you everybody. Thank you. And with that, I'd like to invite Sri Atanu Das, ex-CEO Managing Director, Bank of India, to present mementos to our guest.
Thank you so much, sir. And hereby we move on to our next session, which is the Masterclass 2. And for the same, let me please invite on stage Senior Associate Innovation Products, NPCI, Ocean Kumar. Requesting Srimati Ocean Kumar to please join us on the dais and commence the session. Thank you so much.
Good afternoon, everyone. Thank you for joining me for this masterclass today. My name is Ocean, and today here I am presenting NPCI's Infinite platform to you. Can we move on to the slides, please? Thank you. The first slide. So since today morning, we've been a part of multiple product launches, panel discussions, and masterclasses. And one thing that should stand out in common for all is that this is a very collaborative workspace where banks, fintechs, the government, all are working together. And one integral part of this entire machinery is NPCI, where any fintech or any bank who wants to deliver a good quality value product in the payment services to their customers, they would often come to NPCI for integrating the products released by NPCI into their own services. Next slide, please. So generally, the product rollout journey for any fintech or a bank side product would entail the ideation process where the value proposition is prepared. Next, the fintechs and the banks would collaborate together, and NPCI would be there to help with the development and testing support. And finally, before the product release, you have a process which is called certification, which is penultimate to market release and is very crucial to test whether the product which you are putting out to the market is meeting the necessary requirements set by NPCI or not. Here comes my product, which is Infinite, which helps the fintechs and the banks become certification ready. Next slide, please. So certification, as I was explaining, is one of the major processes inside NPCI, where what essentially gets tested is that whether you're meeting the minimum requirements or not. For example, if a transaction in UPI has to go through, then the certification process would essentially check that if the right parameters have been passed, is my transaction going through or not? And if the incorrect details have been provided by customers, say like you and me, then the application or the product which is being offered by the fintech or the bank should give an appropriate response for the same. And this is where, to make the fintech or the bank certification ready, Infinite comes into the picture. We have two major products. One is our pre-cert platform, which provides the NPCI-related information, documents, technical specifications, etc., along with the testing support and development support required at the time of your product launch. And the second one is API Accelerator, which is essentially a platform which hosts APIs, open APIs, not only from NPCI, but also from other external participants as well. So those who want to put their APIs in the open market for the general public to see would be able to do so on the API Accelerator platform. Now, NPCI Pre-Cert is the platform which I'm going to focus more on today. And briefly, I will be touching the API Accelerator platform towards the end of the presentation as well. Next slide, please. Yeah. So today, without doing much deeper into the certification process, previous slide, please, previous slide, yeah. So without going much deeper into the certification process itself, I just want to make you understand what Pre-Cert does and how you can come onto the platform. Essentially, the Pre-Cert and the Swagger Playground provides you a testing field where you can test out the APIs at the time of initiating your development. And once you are decently well enough into your development phase, you might want some real-time testing, for which my API pre-cert playground comes into play. Here we provide different test cases, which is essentially scenarios of success or failure of any transaction, which you will be able to test over a self-serviced platform, which is called Nfinite. The way to reach it is by contacting the NPCI RM, and then followed by providing certain basic details. On the next slide. There are some basic details which you have to provide. We will take all of these details, and the NPCI team will create an account for you. Once the account has been created for your organization's admin, you will be able to view whatever is available on the pre-cert platform. All the technical information required for development, the product documents, etc., everything will be available. So the way to go is to contact either myself, my email address is given at the back of the deck, or you may connect on WhatsApp at the number provided on the screen. You can share your basic details, and in case some of these details are not available, for example, there is a section called Bank Partner Details section, which some of you might not have. So citing your requirements and the reason for not having these details, you can get in touch with us. And once we validate and create your account, you will be ready to test on the platform. The link for the platform has also been shared down below. Next slide, please. So the reason why pre-cert even came into being is something which I'm going to get into now. So the process of certification which happens is like a final stage. However, before that, a lot of testing support and development support is required by the banks. So we are providing a very flexible platform where which you can access round the clock. It has an API playground as well as a testing playground for the test cases. You are able to connect to it without the use of any IP whitelisting, which is a common process which happens inside of NPCI. And even multi-party testing, which is a part of UPI, can also be initiated over here itself. Next slide, please. So it is a very user-friendly platform where you are able to manage your own profile, do the transactions. You're able to record whatever transactions have been performed, and you have dashboards which represent everything that you have done so far for managerial transits. We are also providing test case assistance, any complaint handling. If there are any errors happening at the time of the testing, all of those things are provided. Next slide, please. In case if you want to get onto pre-cert, you can contact on that WhatsApp number. And then coming to the second service that I was talking about previously, it is API Bazaar, which is essentially open APIs from not just NPCI, but also from other external parties. So you can get onboarded onto API Bazaar by contacting your NPCI RM again or to me. And there is a select user group which we have at the moment. And if you want to participate in that, you're most invited. So as a part of the user group, we request you for basic details like your name, reason for enlisting, etc. And you will be easily onboarded onto the platform. You will be exposed to open APIs not only from NPCI products like UPI, IMPS, BBPS, etc., but also to certain other entities' products. I will not be taking any names here today, but there are around 30 products on API Accelerator at the moment. You can check them out either on cert.nfinite./ACCL or nfinite.in. both the websites are accessible. Next slide, please. So the core value proposition for API Accelerator is to bring multiple minds together. It is a very collaborative platform where multiple parties can interact together. The way to go is essentially to get hold of the APIs, start the initiation of your product, and get to an MVP level, at which stage you will also be connected to the product owner for that particular API that you have been using. And overall, you will get to interact with NPCI, the product owner, and develop a product which is meeting proper standards and delivering value as well. Next slide, please. So API Accelerator can help you to uncover several benefits, like the use of APIs from different products that are hosted there, debate on different ideas and possibilities for the future, and develop new market solutions. Final slide, please. So this was for my product, Infinite, and you can reach out to me on the email address which has been provided at any time. We will be there to help and assist you in any way possible. Thanks a lot.
Thank you so much, ma'am. And with this, may I please invite on stage Mr. Debashish Mahapatra, sir, to kindly do the honors for Srimati Ocean, ma'am. I'll please request her to kindly join us on stage. Shri Debashish Mahapatra. All right, so the day has been very productive, but yes, we are still left with one more very awaited session, as in all the panelists are the investors as well. So that session is going to be the most awaited one for sure, and will be the most interesting at the same time. Till then, I'll please request everyone to stay tuned. We'll be back in next 5 minutes with some special awards and recognitions for the day, and of course, our last session for this evening. All right, so we're all good to go for the most awaited session of the evening, wherein the panelists are the investors. So this session is going to be very, very exciting and interesting for all of us. And to moderate the session, I may please have the pleasure to welcome on stage our CEO, I Serve You, Shri Devi Prasad Sarangi sir. Can we please welcome you on stage? And looking forward to this exciting and amazing session of the evening. And I may also have the privilege to welcome our proud panelist for the session, Shri Somen Das, Director, Capital Market and Investments at Vikash Capital, Srimati Subhashri Mohanty, Head, Prepaid, Wimbo A. Naspers Company, Shri Rajiv Verma, MD and Head, FIG and GIB, Edelweiss Financial Services. And here is the time wherein we begin with this exciting session. Over to our moderator for the session, Mr. Devi Prasad Sarangi. Ladies and gentlemen.
Good afternoon, everyone. So, as Dibendu said, it is the most awaited session of the day, because at the end, probably we will talk about fundraising. I think a lot of fintechs are here, so I would also request them if they would like to know about the art of fundraising, so they will hear from the horses of the mouth. So unlike startup hotspots like Bangalore or Mumbai and Delhi, where most of the fundraising activity and wealth been created, but Bhubaneswar seems to be lagging behind. Hence, it gives me immense pleasure to introduce an eminent panel who have gone through the journey, have helped startup to go through the journey, and then managing funds globally and nationally. So let's go around the table with brief round of introduction, then we will get to the discussion. I will start with Rajiv first.
Thanks a lot, Devi. And again, good evening and good afternoon, rather. Everyone, it's been a pleasure here, and thanks for this invite. Great to be here in the city of Bhubaneswar. So I'm Rajiv Verma. I'm with Edelweiss Financial Services. I'm the MD here. Heading the financial institutions space and the entire capital markets. Been with them for about 6 years, and prior to that had spent about 19 years with Bank of America Merrill Lynch. I think in short, I just want to highlight, I mean, at Edelweiss, we are basically, I represent investment banking, so basically we are here to really help companies raise money through private equity, through M&A transactions, and through IPOs and QIPs. And we also closely work with a lot of fintechs, right from Series B right up to scaled fintechs. So look forward to interacting with a lot more of you. Thanks.
Thanks, Rajiv. Hi, everybody. This is Subhashri. Subhashri, I head the issuance business for Wibmo. Wibmo is a full-stack payment platform, starting from issuance to acquiring to payment security. We are by four, covering today 70 to 80% of India market. And Wibmo is a fully 100% owned subsidiary of PayU Payments. I'm sure that's quite a household name now, in terms of taking care of the majority of the bill payments and e-commerce transactions that happen today. A little bit about my background. Yes, feels very excited and happy to be back home. It's my home territory. Been an investment banker for 5 years, but then moved horses and kind of been a part of the BuildDesk group for 5 years, and now in the PayU group. So very excited for this session, and as Devi said, lots of interesting conversations I've seen through the day, and yes, we will look forward to.
Thank you. Thank you, Subhashri. Thank you, Devi, for inviting all of us. It's been a privilege to be part of this August gathering And as Subhrishi said, this is our home territory. I'm also from this state. I'm originally from Cuttack. Started my career with Tata Power, post my engineering from NIT Rourkela. Worked with Tata Power, then with Accenture, and then moved abroad, did MBA, and then started working with Silicon Valley Entrepreneur. And there I learned the art of fundraising over there, and did work with a couple of startups in US, went on to do something called special purpose acquisition companies in US, raised $2.7 billion with 7 SPAC IPOs, took two companies public, both in the technology sector, took those companies public in NASDAQ, and currently working to take a lithium company public in the US. In Vikasa Capital, apart from doing that, what we also do is we invest into Indian capital market as well. To tell you something, Neogen, which is the parent company of ISU, Vikasa Capital is also an investor in that. Okay, so we invest in fintech companies as well as other companies in Indian market space. So we'd love to hear more about the discussion. So looking forward to the discussion, Devi. Yeah.
Thanks all of you. So Rajiv, I'll start with you first. So globally, fintechs have created largest amount of wealth as a section of tech industry, right? And we saw the rise of Stripe, Square, or Braintree in US market, right? So do you see Indian market going the same way?
Thanks, Devi. So look, I think the Indian market has already exhibited enough signs of having moved in that direction. I mean, I think, and I'm sure most of you are already aware of this, in 2021, we had $7 billion of funding in across Indian fintechs, which is probably one of the highest numbers. It probably accounted for, I think, bulk of the financing that had happened across, the investments in that period by the, from the private equity side. That number has, of course, come down to about 5 billion, the subsequent year, and we are now, talking about the people say the funding winter. Having said that, I think if you look ahead, my view is we are still looking at a very, very strong growth trajectory in India. So, in fact, I think, at least from whatever we understand, India will probably surpass, I mean, not maybe in value terms, but definitely in terms of the incremental growth, the US in many ways, because I think India has also got the classic combination of, we have the skill set with us, we have probably the talent, we have the demographics clearly in our favor. And I think more importantly, we've already seen, 23 unicorns, we're headed for probably a lot more of those. And so we have, I think, a lot of the founding or the building blocks in place. So, we keep reading, there's a lot of research around this, talking of how India is going to go from being a $100 billion market in terms of the fintech market to $1 trillion by 2030. And honestly, we at least are very, very confident that this is very, very achievable. Wouldn't be surprised if we actually surpass this. So, I mean, sorry, a long answer to your question, but look, I think we are probably going through a slight funding hiccup, but in my view, we can discuss that in more detail. That's near term, but I think the growth story remains very intact, and we do anticipate that growth to be extremely strong going forward.
Thanks, RB. So, Sri, what's your take on the same question?
So, Devi, see, as just extending to what Rajiv just said, right? Like 2021, we saw close to 7.5 billion investments that came over to fintech. Why and what we think, of course, definitely, I completely aligned with what Rajiv said. The growth story, the trajectory forward for fintech is absolutely intact and is definitely going to be a very steep curve for us because we have the right recipes in place, right? We have the right demography dividend. We have the right emerging trends, if I may put it, starting from mobile penetration to your network penetration, to adoption, which is much higher. We know it is at 80% of adoption in fintech, which is India, much higher than the global trends. So from that perspective, I think it is going to be a great story. However, what is the aspect that is going to be very key and something for us to watch out for is growth at what cost? Which means to say that so far the way we have grown, the fintech has grown, and how, so till let's say 2022, 2023, and how and what would be the recipe for fintech to grow from here? There could be a difference, and there could be newer attributes, newer KPIs that our investor population would be looking out for, and that would be a key change. For example, just to start off with, I think the world was running after the top line alone. And right now, what is going to be very tricky for even the business stakeholders as well as investors is to watch out for business sustainability. And hence, bottom line focus is also going to be a key driver that I think the fintech industry definitely needs to watch out for.
So, Soman, for you, also the same thing. If you can throw some color.
Yeah, I think I would just add on to what Rajiv and Subhashri said. It's the same thing. Obviously, the fintech story is intact for US and as well as India. The main thing I would say is in India, someone mentioned about 24 unicorns. So we have like around 110 unicorns in India. So 24 more or less is around 20%. The same thing is for US as well. So US around 900 unicorns, and out of that 180 are fintech. So more or less roughly 20% in both the cases. So when you mentioned about what the fintech story for India, it's the same thing. The demographics are the same. It's growing. It's the population for you can say mobile penetration and all those things mentioned. So all those things are in place, and obviously for India, the main thing is we are still have a lot of catch up to do. Okay, so the incremental growth is definitely going to be there, and so the fintech story is here to stay. Yeah.
So, Soman, for you, we have been hearing a lot about funding winter globally, not only in India but also globally, right? Yeah. And because you are seeing the market from the top, right? So, do you think it will also be affecting the growth of fintechs particularly?
I won't say it would affect fintech particularly because it's affecting every sector. Okay, so every sector is affected some or the other way. So we all know why this is happening. Obviously, the pandemic boom, which fueled the quantitative easing and all the central banks in the world pumping a lot of money into the system. So gradually, this has led to a lot of inflation around. So what they are doing is they are doing tightening. So because of that, the money is being sucked out of the market. So that tightening is happening. So investors, they want to sit with their money. They don't want to invest new. And obviously, the pandemic boom, which had fueled the valuations of the company, some of the valuations were not rational, to be very honest. So that correction is happening in every sphere. And to be honest, technology is one of the sectors which had the highest valuation compared to other sectors. So fintech was also part of that thing. So all those things is affecting, but I won't say that fintech is to be singled out. But yes, definitely all the sectors are affected in some or the other way. Yeah.
Thank you, Samin. So you want to add something?
Yeah.
Yeah.
Maybe I'd just like to add, I think, and I think Subhashri actually touched upon this, that I think one of the reasons what we're talking about is the funding winter. Obviously, I think, as my colleague earlier mentioned, obviously you had the macro reason which kind of led to that whole, correction in the market valuations in the tech stocks in the US, and it had the ripple effect in India. Having said that, I think the change that is important that's happening, and I think it's, in our view, I think that change is here to stay, is that there is actually a focus on actually pushing fintechs towards at least profitability or a path to profitability. And I think, Subhashri earlier touched upon that. That is becoming, I think, a big shift. And I think that is partly responsible for also wherever, investors felt that maybe the valuations were somewhat, not fully reflective of that, or where the path to profitability is not very clear. We've seen some adjustments on valuations. So yes, there has been a valuation adjustment to some extent, but I think what's more important is once you get that path to profitability, at least our views, you will still see a growth coming back, funding coming back, and more importantly, maybe another statistic I'd love to share with you guys was, very interestingly, if you look at what's been a shift, right? While the value of funding has reduced, the actual amount of funding that went into a lot of fintechs in the pre-Series A, Series A, or Series B was either higher or equal to what they had done in the previous years. So where we saw the slowdown was actually in the Series E round, which is, as most of you know, is the last round, which is basically the late stage fintech. So which are basically scaled fintechs who had already grown at a very large size. And that's why we saw a bit of a slowdown. So again, what's interesting is, while there is a funding winter because of the, the numbers, but it's interesting if you kind of, drill down, there has been investments happening at a lot of the earlier stage startups with a focus on profitability.
Thank you. Thank you, Rajiv. So, as a veteran in the industry, how do you see, is it different from other slowdown in the past?
So I think I partly answered that question. As I said, I think some of it is to do with the profitability path and the fact that we are actually seeing investments coming in the newer fintechs. And I think the bigger point here is what we just touched upon earlier. There is still, I think, enough belief that the growth for the Indian fintech industry is still there. I mean, we have a lot of the parameters already supporting us, a lot of the factors driving us. So at least our view is, as you continue to see that emerge, that will happen. Also, I think there are two sectors that we believe will continue to see that emergences. Again, if you see where most of the money went in fintechs, right? It went largely to lending and to payments. And like within that, I think the third sector that we are seeing emerging is what we call as bank as a service. It's already very large in the US markets. So banking as a service and embedded finance, I would actually say they are flip sides of the same coin, but those are becoming very, very relevant. I mean, again, I think your company, again, is a very classic example of banking as a service platform, where you are providing the platform across the fintechs and the banks. So again, in our view, you are seeing some new trends emerging, but which will continue to grow. So to answer your question, I think the slowdown is, I think the growth in the fintech market is not slowing down. Maybe the funding is seeing some hiccup, but this year, so we may see slowdown over the next 6 months in terms of the amount of funding, but we're still optimistic about the, over the next 12 to 18 months.
So while maybe typically we think of slowdown as not something that we all love to hear, slowdown is good. It's good for governance. It's good for for the business to take a step back, look at your product, deepen your employees' engagement, deepen your governance, your policies, your compliance. This gives you the time. Because sometimes it's good to take a break from that hunger after the top line to take a step back. So I genuinely feel that sometimes slowdown is good. It's not so bad.
Thank you, Subhasri. So, as you have been operating Wipmo from a long period of time. What kind of opportunities do you see in Indian fintech ecosystem? And as you know, we are hearing a lot about layoffs in different industry, but not much in fintech space, though. But so, what's your been strategy at Wipmo?
That's a good question, Devi. So, see, if you see across all the sectors which have seen that kind of layoffs, that has also been alluding to something that Soman mentioned, right? That there has to be some correction to happen. The correction could be as a virtue of the fact that was the remuneration packages really viable? Was the remuneration and the hiring strategies in line with the short-term outlook of the management or governance at the funding streamline? So I would not want to give a very umbrella view in terms of what happened in terms of some of the attritions we saw across the industries. It would be more of an outcome. And if you see every industry, and fintech was quite resilient that way, because I've got a funding, people went berserk and massive in terms of hiring, in terms of talent retention. And this, I believe, was more of a course correction for whichever organizations it happened. But otherwise, we at Wipmo or PayU, I think given the very nature of we as an entity where we are not at all valuation focused, our focus has always been sustainability, profits or sustainability. Hiring has always been on a very cautious note. So that has always been our strategy all throughout and will continue to be. And I feel you are better placed in terms of ensuring your overall governance and your investor stakeholder management as well in that regard.
So, Rajiv, so on a lighter note, this is the last question for you. So, 10 years ago, you must have visited Bhubaneswar before, right? So, 10 years ago, would you think Bhubaneswar city would be a city to have a fintech ecosystem the way we are creating today? Have you ever thought that?
So look, I've visited Bhubaneswar earlier, I think a couple of times. Obviously, I think the changes are quite dramatic, and again, if I have to be truly honest, I mean, it would have been harder for me to visualize 10 years ago a full, fintech hub being developed in Bhubaneswar, and I think it's really interesting and really nice to see the kind of steps being taken by the companies and the government here to really create that infrastructure today and that ecosystem, because eventually for any place or any industry to succeed, you need that ecosystem, and that's the foundation stones. Obviously, I think my co-panelist Subhashi will probably have a much better perspective on this, having been from Bhubaneswar. So maybe I'll ask her to add.
Thanks, Rajiv. So yeah, as I said, it's Odisha is homeland. So maybe to answer your question and spend most of my childhood here. See, Odisha always has two very key strengths, and I think every single person over here who has spent years here in the city will agree with me. We have seen the maximum number of natural calamities and disasters, and yet we have shown the resilience to come back, right? So people say Mumbai never stops. I say Odisha always gets back. So second, so we have resilience. Second, I think time and again across organizations, each one of us have seen the number of, at the cost of sounding politically incorrect, number of Orias at the epitome of organizations to the highest epitome across all the financial institutions, government institutions, and that tells you the quality of our talent. So we have resilience, we have talent, we have the right recipe. All we need is the next step, which is capital. And what will get us the capital? So that's where I'm heading to tell, is I think we need, and we have done considerable progress in terms of setting up the right ecosystem. And that's where I would request the policymakers over here to set up the right framework, the right ecosystem. And as I said, we have covered good ground, but I still feel there's a lot more that can be done to retain talent, to attract this talent, because this is our homegrown talent. And I'm sure Odisha will be shining very soon. I'm sure decades back people were saying that about India, and see where we are. So I'm sure we shall get there too.
So, Somen, this is for you. So, we see a typical playbook of US-based fintech startups of raising tons of capitals and then spending it on customer acquisition. As we are talking about as a fintech startups in Odisha, what should we learn from the US fintechs? And as Subhasri also mentioned, we have the talent, we have the resilience, and the next hindrance is capital, right? So what do you think, like what should we do, or what are we doing wrong, right? How can we correct ourselves in order to raise capital and become a growth making company?
I would say that what we should learn is like we should not follow what the US companies are doing. Okay, so they have tons of money. They have the venture capital money which they use to subsidize and use that for customer acquisition. So we don't have to do that. We have to use our capital very prudently. Okay, so that's the first step what we need to do. We need to follow that path and check on the profitability part. Okay, should not spend lavishly, should not spend randomly, check on the profitability part. That's the first step we need to do. And second step, obviously, US, I won't go there because it's a different market altogether in terms of the ecosystem and all the funding and raising capital. It's a different thing. But we could start with that, obviously, what I already mentioned. Then about the startup ecosystem and about Odisha and Bhubaneswar, which my panelists have already spoken about. We already had those things in place. What we needed is entrepreneurial spirit. We needed people like Devi who would take it on their stride and start a company like I Serve You. Okay, so we always had the talent. What we needed is some kind of entrepreneurial spirit. Okay, so at our end, so that we need to have that ability to take the risks. Okay, so that was something which was missing somehow in Odisha before. But over the last 10 to 15 years, I can drastically see that there has been a huge change in that. There are a lot of startups companies coming up. People are not looking for campus jobs. They are straight away looking at creating something or the other of their own. So that trend has come up to Odisha as well. Okay, and I believe that's here to stay, and definitely that's going to drive the overall startup ecosystem and fintech in Odisha as well. Yeah.
Thank you. Thanks all of you. I think it was pretty informative for all the fintech entrepreneurs or probably students or employees who wants to become an entrepreneur. It was, I think, pretty informative for all of us. I would like to thank you from bottom of my heart for joining here with such a short notice, right? So I would invite Shri Atanu Das to give the memento to all our panelists.
Thank you so much, and that was quite an interesting session. Once again, thanking all the panelists and our moderator. And with this, I strongly believe that everyone had a really productive day. It was full of information, and of course, the kind of initiative this is going to take us to the next level. So Odisha is definitely going to be the next fintech hub, as we believe, and looking forward to the same. Moving on, we have something very special here, which we are about to do right now. Someone whom I would like to welcome on stage, and it's definitely an honor for me, because we here believe that he has been in the field for years, making sure that he has left his prints on us in a way that we look forward to. I would like to introduce you all to the ex-Managing Director and Chief Executive Officer of Bank of India, none other than Shri Atanu Kumar Das. Can we have a thunder round of applause, ladies and gentlemen? To brief a little more about him, Shri Atanu Kumar Das is a postgraduate in applied economics and a NET holder from UGC while pursuing a doctoral degree in IIT, Kharagpur. Shri Das joined the banking industry as economist in the year 1994, and about 26 years of banking experience he has been involved at both policy and operational levels. Prior to assuming charge as Delhi regional head in January 2015, he was heading Vijay Bank's Lucknow region for more than 3 years. At Vijay Bank's corporate office, Shri Das was handling planning and development, a very key department amongst others. He has been part of several important training programs, workshops conducted at premier institutions like IIM Ahmedabad, ASICI, NIBM, BTC, Frankfurt School of Business Management, and IDRBT. Well, talking about his credentials is endless, because being in the industry for more than 26 years itself is a proof that he has given his heart and soul to the field. And with this, to present to him the Lifetime Achievement Award, may I please request our Chief Secretary, Shri Manas Sir, on stage, please. I may please request our Special Secretary, Government of Odisha, Shri Manas Ranjan Panda. Sir, namaskar এবং অনুরোধ করিবি দয়া করি মঞ্চ উপরକୁ ଆସିବେ। ନିହାତି ଭାବରେ ଆମ ପାଇଁ ଏକ ସୌଭାଗ୍ୟ that we have found him here this evening. He's taken out time from his busy schedule, but तालियों में थोड़ी कमी हो रही है. This is a moment wherein we need to applaud. The energy bars needs to be high, because definitely this is going to be a moment that we'll talk about in the history. And with this, Sir, निहाती भाବରେ आपणकोटू दीपद कथा आमे सुनिबा पई चाहेबु. So I may please request you to render some few words to the earnest gathering here. Over to Shri Atanu Kumar Das. Absolutely, sir.
Namaskar to all the dignitaries present here, the participants, entire team of I Serve You, Manas Saab, he has taken the pains of being here all through. The sponsors who have made this FinTech conference, the first ever, I believe, in Bhubaneswar possible, the panel discussion participants, and ladies and gentlemen, it's indeed a pleasure to be here. I was pleasantly surprised when I received a call from I Serve You after my retirement. I was telling him this is the first time I am joining such an event post-retirement. Honestly speaking, the pains and pangs post-retirements are not known to many, because many are young, budding, entrepreneurs here, industrialists here. So I felt very happy, heart of hearts, and I thought I should grab this opportunity with both the hands. So I should thank Sanjeev and Devi for the honors given, and Manas Saab for doing the honors. Yes, banking has been a difficult terrain in patches, but a successful journey for me all through, a very fascinating journey, lots of challenges. Being a public sector bank adds further to that challenge, because we have to discharge not only our banking responsibilities, but also social responsibilities. As many of you may be knowing, a few days back, I think 3-4 days back, there was a conference at Delhi wherein it was urged to all the public sector banks to expand their activities in financial inclusion, social security schemes like Suraksha Bima Yojana, Jeevan Jyoti Bima Yojana, Atal Pension Yojana, and to enhance the digital footprint multifold. I think PSBs have done tremendously well, although as Shubhashri was saying, there is still a long way to go, because the size of the pie is probably, I think, much, much bigger than what we people perceive about. And we generally tend to become little complacent, overjoyed with small successes. But I think there is a long way to go, especially in the realm of digitalization. Now, to me, digitalization, I don't know what does it exactly mean, whether say, for example, a tender coconut wala displaying a QR code is digitalization, whether I taking my mobile out and paying through some phone pay or GPay, that is digitalization. Whether end-to-end digital platform, seamless, absolutely convenient, with minimum TAT, that is digitalization. I think it's a long, long ocean of, aspects that we need to cover when we look at digitalization. And to that extent, bringing together the bankers and the fintech players and the investors at the end, it completes the entire circle of taking this aspiration, especially in a state like Odisha, forward. There is a lot of scope. We have been, lagging behind. We started late. But I think with these kind of conferences, joint ventures, I think we can definitely go much farther, much further, and with little bit of changes, if all of you permit, just one or two suggestions I can give. As I was saying during the break, I think some of the fintech players who have, proven track record, those, if they can be asked to showcase through demos and other things, it will be easy for us. We are not techies, strictly speaking, but for general people, it will be very useful. Second, Odisha's march in digitalization, I am not fully aware. I inaugurated a digital banking unit of Bank of India, what PM inaugurated a few months back, about 100 digital banking units in Bhubaneswar near the Kalinga Stadium. But again, the requisite outcome is yet to come. So since Panda Sahab also is here, if I can submit that every month we in banks, we receive a scorecard published by MeitY, that is counterpart in central government. Whether something can be done for the state of Odisha alone, a scorecard where public sector banks, private banks, NBFCs, MFIs, they are tabulated, their scores are tabulated in the form of successful transactions, declines, and there is a composite scorecard. I think that also will be of interest. And third part, next time when we are having it in a much larger scale, I think let's bring in the concept of cyber security. I think this is one aspect. The common man, they are still apprehensive about, in fact, I myself received 3 days back a call when I was inquiring the tracking the progress, my Blue Dart parcel. Somebody started telling me about paying 2 rupees and activating my account, this, that. So many people are falling prey to that. So when the common man, I'm not talking about the educated masses, the tech-savvy masses, but the common man, when they are apprehensive, I think some amount of cyber security related aspects can also be brought in there. So broadly, these are the things which can do, and next time around, and I'm sure people are quite, they are enthusiastic and they have the talent, as Shubhasri rightly told. We need to leverage that talent. We need to bring the people together on a common platform, and I think we can go places. Once again, thank you to the organizers, to the sponsors for this honor, and I'll cherish this in my future also. Thank you very much.
Thank you so much, sir. And hereby, for the closing address, may I please request Shri Manas Ranjan Panda once again on stage, sir. I welcome you again for closing the evening officially.
Very good evening. So let me first thank the audience who present here since morning to entire day listening to, of course, very interesting talk, lot of sports, good fireside chats, master classes were there. But still, heads up to you all guys. You kept yourself calm and able to present yourself here. Thank you very much. So I have been given this task, very, very difficult task, to summarize the entire whole day program in 2-3 minutes. I will not take much time. But it's very difficult because so many sessions I've already spent more than 25 years in IT industry in different sectors, government departments. It's one of the best session I have ever seen, with lot of thought gone inside in the fintech domain itself. IT is a vast chapter, but fintech itself is such a huge thing. Whole day we could not able to realize how time flew. So morning we had a very good inaugural session. We have got all top leadership of the state government, the bureaucrats, honorable ministers, chief secretary, the department secretary, finance secretary. So they presented the view how Odisha is always in the forefront in terms of delivering ease of doing delivering its services to the common people of the state. Starting from the principal secretary, who had a strong opinion that how the state is quickly and strongly adopting the technology very, very fast, to the CEO of NPCI highlighted about credit as a differentiator in the lives and livelihood of the people. Subsequently, RBI, the CGM Fintech of RBI, he talked about the sandbox, which recently was introduced by RBI, and followed by the finance secretary spoke about transformation of Odisha has undergone in last 2 decades and how quickly, how the revolution has happened. And in the closing, Honorable CM, during his virtual talk, stress upon the resolve of his government to provide financial literacy and financial freedom to all the citizens. He spoke about the immense contribution made by the flagship programs of government like Mo Seva Kendras and Biju Swasthya Kalyan Yojana to improve the quality of lives of common people. So the intention of government is very clear. So government is very, very forward looking and very, very positive in terms of adopting technology. Any kind of new technology, they are very, very aggressive. With this, we have again very good few panel discussions, interesting panel discussions, fireside chats, and also master classes. So I have some gathered few informations, like during the first panel discussion, which talks about credit card UPI linkage driving the next wave of growth of digital payment, converts with the view that the momentum of digital payment is positive and UPI credit card linkage marks a very important first step. Most bottleneck to widen the UPI coverage has been overcome while gaining trust of user takes time. Again, the second panel discussion on the power to unlock the real value of Bharat, where panelists cited about many use cases which earlier could have been imagined but now become reality. AI agents, how AI agents with capability to speak multiple languages talk to customers and assist them in a variety of ways. Then we have got fireside chat on the transforming rural India via UPI and PPI, which witnessed deliberation on lakhs of customers across the state, including those of rural India being served and entrepreneurs collaborating on multiple interoperable platforms to solve different problem scenarios. We have got also masterclass from understanding investment in fintech. We have got accelerating finance access for SMEs, then financial fintech and banking collaboration in the eastern part, how customers today are more demanding on and accept solutions which are digitally and user friendly. So we have, with this is the first time we have conducted such a beautiful program in the state of Odisha, and we have decided to conduct this kind of fintech. We can convert it to an annual event every year, and with the forward-thinking strategy of Odisha intends to bring into the fintech ecosystem, I am sure this will set a sense for important fintech development to take place in coming years. I urge all of you to join us and take our city fintech ecosystem to a new height. I am once again thankful to NPCI for organizing the event, for helping government to conduct this event. Also, I would like to thank the sponsor, the iSerview, for all the supports. They are the home-based, Odisha-based the fintech company. I also thank all the speakers, the panelists, the experts who has taken all the pain to come to the city. Some of them has visited first time. They should visit the nearby location. So I once again welcome them and thanks them for coming to the state of Odisha. And also I'd like to thank the electronic and press media, my colleagues in the department, and other friends from other department of government of Odisha who are present and attend the entire session today. Hope you all are getting some kind of benefit out of this program. With this, I am not taking much of time. Thank you very much.
Well, that was quite a long and productive day, I believe, everyone. Thank you so much for being here, so patiently bearing with us. And of course, we truly believe that this initiative is taking heights. And of course, it's not too far where in Odisha would also be known as a fintech hub. Thank you so much, ladies and gentlemen. This was your host, Shifali Udgata, signing off. Thank you once again, ladies and gentlemen.